All right, everything looking good. We are live. Let's go ahead and get this party started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8:04 p.m. Eastern Standard Time on February 15th, 2023. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, hopefully everybody's having a good night. Somebody let me know in the chat everything's coming through loud and clear. In the meantime, we'll go ahead and get started. We're going to spend a little bit of extra time on cryptocurrency tonight. Obviously, we saw something that we haven't seen in, probably most people that are investing in crypto's entire life. And that was a 10% move in Bitcoin in a single day, but like to the upside, not the downside. Obviously, crypto's been under some pressure for quite some time. So seeing a decent move like that is, worth note. Now, we did see something similar not that long ago, actually a couple times, and then we went on to put in lower lows. But as of now, so far we have higher lows and higher highs. So we'll pay a little extra attention to that, but we do want to keep in mind that obviously TNX and DXY are looking like they're at least strengthening to the upside in the short term. So that's going to put a lot of pressure on most risk-on assets, which we actually see coming from gold, but we're not really seeing that reflected in cryptocurrency or the majority of the stock market. So we'll take a closer look. What's going on, Durwood? Good to see you. Big Papa Paint in the house. Good to see you as well. That's right. Let's go, guys. All right, so let's take a look over here at TNX. So TNX on the daily obviously came down here, got that nice touch of the 200 simple, and now we had put in a lower low. Now we're back testing up here, getting ready to threaten that previous high. So we saw that we essentially had a low here on the histogram, corresponded with the low on price, and then we put in a lower low on price, but we put in a higher low on the histogram, and that's our bullish divergence. And then that actually played out really nicely off the 200 support on the daily. And keep that in mind because that's the exact same setup that we used to take our Bitcoin long, which netted us a solid double-digit percent. And when I say double digits, I mean barely. Hey, what's going on, Hex Evolved? Good to see you, my man. Hopefully you're enjoying Mexico. Okay, so yeah, TNX, so that thing, and then some momentum and getting ready to threaten the previous high right here. So that's the area we're really watching out for. Obviously, there's a very important level at that 3.86 level, pretty much breaking through there, and more likely than not, we're going back to revisit the highs or go to new highs. So let's just jump back over here and take a look at the DXY real quick. So here we have the DXY on the daily. Obviously, this thing has been under some serious pressure. Basically, just been going in a nice little descending channel slash wedge type deal for a while now. And then recently, again, we saw that same signature, the bullish divergence on multiple indicator oscillators, and then the breakup. We see the 821 bull cross, and now we're anticipating a test of the 200 exponential and likely the 200 simple as well. So again, as we see TNX and DXY demonstrating bullish divergence and starting to get that counter trend move, we do have to be careful in our risk on assets. Now, of course, if you told somebody about that and then you showed them the charts of late, they probably would just think you're an idiot because the worse the asset, the more it has been moving lately. And I don't mean on the way to zero. We saw obviously a lot of trash surge. So next we have U.S. oil. So U.S. oil has been selling off pretty aggressively as well. We've tested up to 200 exponential, but still haven't made it up to 200 simple. So right now, essentially, the market is just deciding what to do. Biden released another quadrillion gallons of the strategic petroleum reserves or whatever. I'm just making up numbers, but they released some more of it. So now everybody's freaking out. And obviously that upsets supply and demand. But you essentially just have like the U.S. government oil cartel versus like the Middle East oil cartel. So it's basically just a battle of two cartels to determine what the oil prices are going to be going into the future. So in my opinion, actual demand and like real stuff doesn't really matter that much right now. It's basically just a battle of these two cartels. And the truth is, obviously the strategic petroleum reserves have like a limited number of gallons or whatever measurement they use for underwater oil reserves, as opposed to, basically like the Saudis and OPEC, which can just like suck up as much as they want from the ground until the earth implodes. So that being said, You know, we don't really know what's going to happen with oil right here, but there's obviously a battle taking place. Getting back above the 236 or the blue line right here is very important, and that'll likely lead to the move up to the 200 exponential or simple. But if we do lose this channel or start to break down, we're literally just a couple % off the lows, and then more likely than not, we'll come down here and we'll finally get our oily nut. All right, so then we have the 210. So we've been talking about the 210 lately. Apparently everybody watches this now. It's like the in thing to do, which is fine. The more people that are paying attention to it, the better. But we're actually looking at the spread as well. And we see here that, you know, the spread had gotten like a little narrower, started to come back down, and then it just kept getting wider and wider. And now we're seeing actually like the spread diverging as the 2-year yields are basically breaking out to new highs. But see, they're still trading at 4.625, which is below the overnight Fed funds rate. So again, we're seeing like the really short term, you know, basically like treasury debt trading at a higher number than the longer term treasury debt. So what that's telling us, what the market is thinking, you know, we can basically look at the signature the market leaves behind, the clues and stuff like that, and we can figure out, okay, what is the market actually thinking and what are they betting on with their money? And in this case, the market is basically saying, hey, if somebody tells me that they're going to pay me, let's say, just for simplicity's sake, 5%, and they're going to borrow my money and they're going to pay me back in 10 years, versus if they say, hey, I'll just pay you 10%, but it's an overnight rate, and then you can just sign back up tomorrow for the 10% again. You don't get the same level of like locking in long-term gains, but that's not necessarily that important if you're getting more for the shorter period of time. So essentially, let's just say, for instance, that it stayed at 10% for the next 10 years versus it staying at, you know, 5% for the next 10 years. If you locked in right now for 5% for the next 10 years, and then the overnight rate stayed at, or went to and stayed at like 10%, you would just lock up overnight over and over and over again. Now, obviously, normal people can't do that. You have to have an account with the Federal Reserve, which means you're like a big bank and all that good stuff. You're part of the club. But the fact of the matter is, all that's saying is, as long as that is the case, we're not going to see people putting that money, locking that money up for long terms of time. So what causes that little like divergence in the market to switch back to normal? Because obviously we know, you know, when we look at this chart here and we see going back, you know, this is on the weekly chart right here, going back to like, you know, the 1980s rather. For some reason, I thought this one went back further. But if we're going back from like the 1980s here to present, you know, we can see there's only been a couple of times when the actual yield curve was inverted, and it was almost always at a top, and it was like a very, very short period of time. And that's reflected by this blue area right here. So now that I have like clicked on the bottom part here, you can see like the blue is like highlighted right there. And we basically have like a tiny bit of blue right here, a tiny bit of blue right here, but nothing even remotely close to what we're seeing here. And then on top of that, we've broken out from this descending resistance line as well. So we know that we're obviously in a situation that's not normal. So could it continue like this? Could it get even worse? Could it go much longer or, you know, much bigger of a gap between those two than anyone's expecting? I would say definitely expect the unexpected right now, because we're already doing something that we've never done before in all the history of this chart, you know, going back to the day of the dinosaurs. So that being said, you know, obviously now when we look at this chart right here, we put this together a while ago, and we're going to talk just a little bit about this because it's important. And I don't think people truly understand why it's so important. As long as there's this divergence in the market, it's basically stopping like the institutions from putting that money to work or like committing to a longer term investment. And I talk about it all the time about how, you know, when you lock up your money in a bond or you buy a treasury bond, that you don't actually ever lose your principal unless you trade that bond in advance of maturity. So if you buy a treasury bond and you're locked in at say 1%, and then you have a time period of 10 years that you've locked up that money for, as long as you wait until the 10 years are done, you get back your full principal. Plus you get your, you know, 1% per year for those 10 years. It's only when you like speculate using a paper product or trade those bonds on the secondary market that you have to worry about not getting back your complete principal. So the obvious question is, Why would anyone do that if they could just hold and get back their full principal? Well, if you locked up for 10 years at 1%, and then let's say in our example, all of a sudden the yields go to, in real life, 4.6%, the overnight rate on the Fed right now is paying people is 5%. So what is actually happening is, the banks are saying, hey, if I locked up this money for 10 years at 1%, and currently it's paying 5%, I'd be better off taking the L on the principal and then actually like compounding the interest at 5% over that time instead. Because it's not like you're losing the whole principal, you're just losing the difference in the value of that bond. So the truth is, you can just hold it forever, but there's an opportunity cost to holding that. And again, as the short-term yields get higher and higher, it incentivizes less and less money to get locked up for longer periods of time. Because you might say, hey, it's not worth messing with over a 1% difference. But now if we're talking about, oh, I'm locked in for 1% for 10 years, and now, the overnight rate is 10%, well, now you're talking about a massive difference. And when I say also that the overnight rate is 10%, it doesn't mean you're getting paid 10% overnight to lock up your money with the Federal Reserve. It means like annualized over the year, it would be 10%. So if you're locking up for like 1 month, you're going to be getting like roughly like 8%. No, that's not it. You're going to be getting roughly 0.8%. And then when you annualize that out by 12 months, it comes out to that roughly 10%. So that being said, it's very important. Now, that's one way that over time, these things could come back into line with each other, is essentially you get long-term rates basically right now are saying, or people, investing in long-term bonds, etc. They're basically saying, hey, this is not going to last. The current situation that's causing the short-term bonds to have such high yields, really it's just short-term paper, but we use that term very broadly. The situation, the uncertainty, the craziness that's happening right now, where the Federal Reserve is essentially paying these big banks not to loan that money out into the economy or invest it or spend it or do whatever they do with it. They just lock it up overnight. So what is really happening? If you just take all the BS out, if you clear away all the brush, all the confusion, everything, and you just say, what is really happening? Basically, the Federal Reserve is paying big banks not to loan money, not to create credit. So the reason I say that is because what the banks normally would be doing with that money is they would be issuing people mortgages, or they would be making people business loans, or, things along those lines. But instead of putting that money to work in the economy and, getting an interest rate from consumers, they're instead locking it up at the Fed. So the Federal Reserve is literally paying the big banks to tighten the money supply by not issuing new credit. And as long as the short-term rates are higher than the long-term rates are, we're going to continue to see that happening. Now, of course, some banks are still going to make loans. Some people are still going to get mortgages, but it's going to be at a higher rate. But essentially, the higher the riskless or overnight rate goes, the more the banks will be incentivized not to lend. So if the rate continues to go up and goes to 10%, you will see almost no issuance of new credit in the economy, because people will just say, or banks, I should say, it's not people, it's corporations, will just say, hey, we'll just take the risk-free rate at 10% overnight from the Fed until stuff changes, not try to loan to these people. So I think it's very important that people understand that the way the tightening is taking place right now, with the interest rates staying higher for longer, the longer that lasts for, the more the market is going to accept that that is actually like the path forward. So, when we were down here and I was talking about the rates going up to 3%, and people were saying it was insane, we would never go that high, and that would have been a breakout from that 2018 peak right here. Everybody was saying that's crazy, it'll never go that high, blah, 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 all that stuff. Well, now we blew through that, and now we're up here at like 5%. So the longer this goes on for, and the higher we go, or if we just go sideways, eventually the market essentially accepts that, that is actually what's going to happen. The same way that once we got up to 3%, people accepted that, And then they started saying 5% was crazy. And now we're up here at 5%, and now they're accepting that. So who knows? Maybe next we're headed up here to that 5.279%. I mean, we're basically already there. And then after that, it's the 6.79, etc. So yeah, I mean, and think about how much expectations have changed as well. You know, the yellow line on here represents the peak in the Fed funds rate, okay, which is not actually represented on this chart by the actual like graph itself or chart itself. But more realistically, you know, the market expectations for when the peak would be. So according to the market last year, when we put this dotted yellow vertical line in, they were telling us, hey, this is when the Fed's going to reach the max rate. And then actually they'll be cutting rates after that. And now the market has accepted, well, actually we'll probably get one more 25 basis point hike, maybe even two more 25 basis point hikes. So again, you know, what's really happening? I mean, this is getting pushed out further into the future. So that's essentially the market accepting that rates will stay higher for longer, which is what this is all really just about. All right, so enough about that boring stuff. Nobody really gives a damn. Let's talk about the Dow Jones. Basically, nothing has happened here. We see the histogram has crossed back above the red slope line. We're basically going sideways. In my opinion, this is the best thing we can do. Just go sideways at resistance. The longer we stay here, the more likely we are to break out to the upside. We're above the 200 exponential and simple. They both have positive slopes. And, you know, everybody's talking about now all of a sudden inflation is going to come back. Sure, maybe it is. I don't know if inflation is going to come back or not. I know it's extremely high right now, and we're pretending like it isn't because it was a little bit higher a while ago. So just imagine if you were like saying, you know, hey, how you doing today? And I'm like, oh, I'm not bad. And you're like, oh, cool. Are you bleeding? And I'm like, yeah, I'm bleeding pretty bad. And you're like, oh no, what happened? And I'm like, oh, I just got shot. And you're like, wait, you got shot like with a gun? Like you need to go to the hospital? And I'm like, no, it's not that big of a deal. I got shot like a month ago, like 3 times. So just like one little bullet wound is like not really that big of a deal. That's basically what we're saying right now. Like, oh, well, inflation last year was like up 7%. And, you know, now it's only up 6%. So everything's fine. We're fine. But like in all actuality, if we just calculated inflation like year over year, you know, we're really up like 15%, you know, and that's using all the official numbers. So that being said, you know, we've talked about the situation over and over again. We talked about businesses and the pricing power that they have and how they're always going to anticipatory raise prices in advance of the actual costs themselves going up, or they raise price on their inventory, etc. In my opinion, the profit margins just really aren't under pressure here. And the majority of the big companies have already reported earnings. And honestly, most of them were pretty terrible, but not nearly as bad as people thought. And a lot of them, even like year over year, were up or at least decent. So that being said, as long as inflation picks back up or stays high, it's not crazy to think that we're going to see like record high valuations on the stock market. I mean, if I told you I was making $100 in profit last year, and then I tell you this year I'm making $120 in profit, and then the next year after that I'm making $140 in profit, and then the next year after that I'm making $160 in profit, is my business becoming more or less valuable? Well, sure, you're like, well, if we account for inflation, blah, 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 but that's not really how the world works. So SPY is next. So we broke out from our descending broadening wedge, and now we're just operating inside this channel. We're testing our resistance right here at the heart line of the channel. We're above the 200 exponential and simple. They're both flipping to the upside. So while we obviously want to see the market kind of stay sideways here or like hold some key support levels, as long as we're on top of the 2, 3, 6, both of the 200 moving averages, the breakout from the channel, we have support from the bottom channel right here. I mean, this is a really important area. As long as we're holding like that 395 level, honestly, this looks good. And it's just a matter of time before we do get a push to the upside and start testing these previous highs right here. And then eventually the measure move breakout probably takes us back to the all-time highs. All right, so triple Qs, basically the exact same thing. The Russell, yeah, it's the same thing again too. Not going to really mess with money supply and all that right now. We can do that another time. All right, yeah, we'll just rip through a couple of these, and then we'll go look at cryptos. So Tesla is still up here basically at resistance, testing the 200. It's not crazy to think it's going to get up here to 224 and test the 200 simple. We're at the 200 exponential right now. So obviously took profits on this. I'm out of Tesla, completely out. I hope it goes to 0 tomorrow. I'm just kidding. I really don't care. But, you know, once I take profits on something, it's whatever. So we have the hard sell right here, but we're still inside the bullish control zone. histogram's picking back up to the upside. It's not crazy to think this is going to actually get up here closer to like 260 or something like that. A lot of momentum with Tesla. Remember, everybody hated it. Everybody hated it. It was trash. Elon Musk was the devil. He was garbage. Me, I'm buying right here because we have reached maximum negative sentiment. And then literally after that, we shot up like over 100% since then. And that's not even exaggerating because we bought at 108 and it's at like 216 right now. So remember that when everybody is the most bearish is when we should be buying. And then when everybody is the most bullish is when we should be selling. And all I hear is how bullish Tesla is and how great it is. And you can see like the volume of Tesla being traded in the market's absolutely insane. So next we have Microsoft. Obviously this is running up here. We got back basically to that W, little double bottom action here. We broke through that. So seems like the next thing that you would do is basically test that previous high. We're back testing the 236 now. So we sold off 50% and then we bounced back 382 back higher low. And now here we are headed to the 236. So once we get to the 236, we would expect to come back down and find some support. And then eventually just retest the highs. I mean, if that's what's going to happen, I mean, I don't see any reason not. You know, if you start looking at the macro and saying, well, there's no way that things can go up because of this. I mean, it's impossible to know what's going to happen going into the future. That's why I'd much rather have the technicals than the fundamentals. Because the fundamentals, you could be right on something and it might not happen for 10 years. But with technicals, it's going to give you like an idea as to when to expect something and invalidation areas as well. Like if I'm Peter Schiff and I'm like, Bitcoin's going to go to 0 and then it like goes to 70,000, you know, and then comes back to like 20,000. I mean, there's no like quantifiable, like if it doesn't go to 0 by this point, it's over. As where with technicals, you have that. So it's much more important. Next, we have Apple back on top of the 200s, likely headed to the back of the channel right here, which would still just be another higher low. So we really got to pay attention to that. Obviously, you guys know we shorted Apple up here. It was a beautiful trade setup. We never quite got down to our target, but we went ahead and closed our short right here as it started pushing back to the upside. Still a really nice short. But, you know, obviously now in hindsight, we can see how much of a goddamn genius we are to close that position because since then, Apple's up 14%. So don't get married to your trades. If things start to change, make sure you change as well. So Google. So everybody hated Google. It was definitely going to 0 because of chatbot AI or whatever the hell everybody's worried about now. So all of a sudden, Google's just going to go to 0. Everyone hates it. It's a complete garbage company. It's useless. No longer serves any purpose whatsoever. So yeah, I mean, it's just probably just going to go straight to 0. So I would just count on that. But in case it doesn't, it is kind of just bouncing around between the 382. Obviously, could have had potential to move back up to 236. Failed pretty aggressively. Obviously, this was AI directly attacking Google. So I don't know what Google looks like, but just imagine a bunch of digital robots beating it up. That's basically what happened right here. So who's going to win, Google or the robots? I don't really know, honestly, but as long as we're below 99, seems more likely than not that we're going to come down to the bottom of the range. It looks like we're back testing 821, trying to avert the bear cross. If the bear cross takes place, again, last time we had the bear cross, we went to the bottom of the range, and then we had the bear cross again, we went to the bottom of the range. So more likely than not, if this thing turns red right here, we probably just go back to the bottom of the range. And then, you know, at that point in time, we'll probably just buy that again. Just take the same trade 3 times in a row. And, you know, maybe the third time won't work. Who knows? So Meta obviously had that gap up and everything as it destroyed Google. It beat it down. It punched it in the throat. Metaverse is coming back. Everybody loves Meta now. Just remember how much everybody hated Meta and how it was dirty, garbage, and it was going to 0 and they were wasting money and they were burning billions and it was trash. And then I called for the capitulation right here when we gapped down and then the actual gap fill closed. And since then, just like miraculously, the exact same way, everybody went from hating Tesla and hating Elon Musk and he was the devil and hating Meta and hating Mark Zuckerberg and the metaverse. The exact same thing happened. Now everybody loves it. It's the future. It's great. And we went from gapping down to gapping up right here. So is Meta still the same trash that it was not that long ago? Sure. Does everybody else think so? No. Now people love it. It's amazing. It's great. It's glorious. Just know that even if Meta was at new all-time highs right now, it would still be trash to me. It holds a special place in my heart. And, you know, honestly, I don't think anything will ever take that away. We do have like this little position that we showed off right here. I did not short Meta. I have no interest in trading Meta whatsoever. I'd rather just look the other way. But basically just that gap fill from this level right here would just be a back test of the 200 exponential and simple. I think it's very dangerous to be shorting in this market right now as far as like open shorts. You know, if you have a position and you want to cover it, go flat or go net negative, that's fine. I would just be really, really careful. I mean, it definitely feels like the ample opportunity for like squeezes to take place. Speaking of squeezes, we'll talk about what Bitcoin just squeezed out. But before then, let's talk about Amazon, the last of our magma stocks. So here we are just backtesting that support as resistance now. We came in here, we closed the gap, we gapped down, we closed the gap from the gap down. And now here we are just trying to hold on to the 821 bull cross. Bunch of red histograms, hard sell signal. Stochs are coming down aggressively, but we're holding. The key thing we want to see here is just a higher low hold. And for now, it looks okay. So the real question is, do we put in a new macro lower low below $80? Or do we push up here, back test the 200 exponential and simple again at 111? I don't know. If you do, just let me know though. So this already played out pretty nicely. We'll have to see after that. It's not really like a great setup or anything. I guess realistically, this is a pretty hard resistance right here. So if you were like super bearish on Amazon and you were convinced it was going to zero, probably now would be a good time to bet on that. I'm not convinced that's necessarily the case, even though Amazon didn't manage to make a single dollar in all of 2022. We'll just assume that it was, you know, some little tax trickery and that Amazon is still a valid business going forth into the future. All right, let's talk about some cryptos now. Super exciting. Let me jump over in the chat real quick here. What's up, Paraj? Good to see you. What up with you? Big Papa Paint says, more people should be following Crypto Trend Trader, one of the best on YouTube. Hey, thanks, Mom. I appreciate that. Oh, wait. Big Papa. That can't be my mom. I just assumed. Hex Evolve says, when I get wife to watch with me, her eyes glaze over and has to be excused after 30 seconds. I don't blame her. Honestly, I would never want to listen to myself, but you know, I don't really have the choice. So unless I go deaf, I'm basically stuck with that for the rest of my life. A new name for magma? Yeah, maybe. We'll see. Okay, so let's jump in here to our cryptos and see what the hell is going on here. So honestly, we got back on top of the 200 exponential and simple. All of the group members out there know, obviously, well, pretty sure the last stream we were long. Crypto is not looking so hot right here with the 821 bear cross, but we went ahead and stayed in the position. So we'll just kind of walk you through it if you haven't been paying attention or you're not in the group. So the 4 hour here was looking pretty bearish, obviously, below the 200s. And then we started cross back to the upside. So when we crossed the 821 bullish, that was a really nice setup. So then when we came back down here as support, you know, this should be a buying opportunity because on the 4 hour time frame, obviously it's blue. So when it's blue, we buy dips. When it's red, we sell rips. So obviously it's blue, so we buy dips. So when the 821 bear cross down here pushed up lower high, came down to a lower low, we're looking to buy support here at the 200 exponential. And then we back tested obviously 200 simple a couple times. And now we have broken out back to the upside. If you didn't enter back down here because you were worried about it or scared or anything like that, obviously the 821 bull cross was your last chance to get in this before it kind of skyrocketed to the upside. The other thing is we were talking about that bullish divergence here. So here we came down and put in a low, and that corresponds with the low on the histogram and the jewel thief as well. And then we came down here and we put in a lower low on price action, but we put in a substantially higher low on the histogram. And we specifically focused on this right here. I've talked about this like a gazillion times over and over again. It doesn't always work, but it's one of the most reliable things you could probably ever do. And one of the reasons why I love the TDMACD, which if you're not using the TJD TDMACD, just go get it for free. And then you don't ever have to listen to me again. You just figure out how to use it and then you won't even need me. So that being said, bunch of green histograms, multiple red histograms in a row. So now that's obviously 2 reds in a row is good. And then we see a higher low on the histogram. It's above the slope line and then the slope line flips blue. That's like one of the most reliable signals ever. So we have bullish divergence with momentum. So the bullish divergence is telling us we're about to have a move to the upside while we're picking up positive momentum with an 821 cross. And then everybody knows that when we zoom out here and we look at the 200 exponential and the 200 simple, when the 200 simple crosses above the 200 exponential, it means that the momentum of the trend is running out. But more often than not, what happens almost all the time, and we talk about it literally over and over and over again, Well, we almost always go on to make new all-time highs and then get rejected and then go substantially lower. Is that going to happen in this case, or is Bitcoin just going to go straight up to 30,000, 40,000, 50,000, $1 million, and then we can all just go live on islands together, leave all of our wives and children behind and, fill it up with prostitutes? Maybe. I mean, if you're into that stuff. But the truth is, I mean, realistically, so far it looks so good. So, I mean, that's it. So we're just doing the thing that we expected to happen. Because I'm disciplined, I did take some profits along the way. Obviously, after everything just completely surges to the upside, sure, you can feel a little bit dumb if you took some profits too soon. But the truth is, it was kind of a tight setup here. We were only really looking at like 5 to 10% to the upside. And obviously, when we hit our first target, backtest of resistance, this obviously being what was support, and then when we backtest it up to its resistance, we take some off the table just in case it rolls back over. Now, obviously, you could trail your stop, and that is definitely a potential opportunity as well. But because it was kind of a tight setup, I just went ahead and took some profits. So I closed half the position on that initial like 5% move up, and then we got another whatever, like 5% after that. So it was a total of, I can't even remember. I think it was right around 10%. We entered in at like, I don't know. Does anybody remember? Damn it. Well, I don't even care. It was like, just go down to the 1 hour really quick. All right. So it was 22,130, I think it was. We entered into it. So it was like right around this level. Oh, no, I'm sorry. It was before the back test. We entered into it right here. We entered in on the 821 bull cross right here. With the initial target being the back test of the 200 exponential and simple. And then we started consolidating here, and it looked like it was going to burst to the upside. So that's when we hit our second trade setup target right here, which is where I took profits at, which is 22.8. And then after that, we went absolutely parabolic. Probably quite a bit of that, a short squeeze, but doesn't mean we're not going to continue to the upside. So now that we're done on these shorter time frames, we can see here, if we just kind of zoom out, this is basically the setup that we've been talking about. Now, granted, we've moved this a couple different times at various levels, but this is essentially just the same thing we've been talking about. Descending channel, we put in the 1, the 2 correction, then we put in the 3, the 4 correction higher than the 1, the back test of the breakout, and then we shot up here immediately afterwards. Now, if we take, depending on where you're looking from, this was obviously the area we were looking at before. Once we broke through that, we look at the next level right here. So if we go from that peak high right here at 22,650 down to the macro low right here, it gives us our 1.236 Fibonacci extension, which is exactly where we came up to and tagged. More likely than not, though, we probably push up here to like the 1.5 or 1.618, like somewhere along these lines. Now, we also have some key macro fibs as well. So we have the lower low right here. Then we have the back test of the the lowest low right here, and then the back test of the 236, and then the 236 and 200s acted as support, and now we're headed up here to the 382 potentially, and then the 0.5 is actually at like the macro fib. So, this was basically the plan if we're going to break out and start heading back up here to back test like 30K and some other key levels. So far everything looks good. Could it fail at any point in time? Sure. I'm starting to like how the longer time frames on Bitcoin look like more and more, honestly, as time goes by, which is usually what happens when you're in a downtrend, clearly based on the red and pink. And then once we get on top of the 200 exponential and simple, it starts looking a lot better. So we're on top of the 200 exponential and simple. They're both blue now. So honestly, when we see a bunch of red histograms in a row, when we see the Stochs come all the way from the bullish control zone all the way down to the bearish control zone. So this was when we were in the bearish control zone last. This was when we were basically topping out in the bullish control zone. Then this is when we're in the bearish control zone again. So the stochastic came all the way back down to 20, and price action was at 16,000 originally, and then when it came down to 20 again, it was at 21,000. So that's a substantially higher low, which is a good sign. Obviously I was expecting it to go slightly lower here, but stayed in the position regardless. The 821 bear cross was a little bit scary. It looked like it was going to have a deeper retrace, but honestly, buying into 200 exponential or 200 simple is a key area. And if you're unsure, just buy at the 200 exponential and then buy again at the 200 simple. Don't so much worry about getting stopped out in between. Look at it as a longer time frame trade. So here we have a couple histograms coming back to the upside. We see the blue slope line. It is starting to level out right here. Is it possible we come up here, get rejected, and then go much lower, print some bearish divergence along the way? Yeah, probably. It's definitely a possibility. So now let's look at the longer term time frames. So this is the move that we talked about like literally weeks ago. At this point in time, it's almost 2 months ago. We basically got, we've been talking about the back test of the 200 exponential and simple. So here, the 200 exponential is crossing below the 200 simple. So this is the exact situation that we just talked about on the shorter time frames, like the 4 hour, where there's potential that actually we could come up here to a new all-time high and then go substantially lower after that. Or we could keep going to the all-time high. But here we have a bunch of green histograms on the weekly. We have lower lows on price action. We have higher lows on the histogram. We have higher lows on the stochastics. That's bullish divergence. Seemed likely we were going to backtest and try to avert that cross, which now we've done. We pushed up here. We came back down. We found support. We pushed up here one more time. We hit our nut. That's it. So for me right now, like the longer that we continue to show like any strength in crypto is good. But to tell you the truth, for me, this is basically just a reversion of the mean in the backtest. We're in this massive uptrend for like a really, really long time. And then we're starting to like go into like not so good downtrend. And then we basically say, okay, this is going to get really bad. So the bulls have one last chance to save it. And that's basically what we're doing right now. So if we get back on top of this level, 25,000, then more likely than not, we just kind of go sideways here. We stay on top of 25,000 and then we can start moving back to the upside. If we get rejected right here, it's probably just a matter of time before we go substantially lower. Momentum in the bulls' favor right now. Honestly, looks good. But it always looks good right before the fake out. So I think the key here is on the monthly, we're in the bearish control zone. Bears are clearly in control. We see now 2 months in a row, one still active, where the bulls are starting to show up. So 2 green histograms is the initial sign for like potential strength coming up here. But the truth is, if we're back above like 27.9, call it 28,000, it's just a matter of time before the 821 bear cross turns into a bull cross, the same as we saw right here. And we saw a nice surge. Obviously, we sold off pretty aggressively with Rona, but we never took out that low again. So I think it's worth paying attention to that potential possibility. Same thing happens right here. Once we get the 821 cross, we just go parabolic after that. So even if there was a situation like this where we crossed 821 back to the upside and then we came down and put in like a crazy like wick back down, maybe to like 20 grand or something like that after going all the way up to like 28 grand, sure, it would scare a lot of people. Sure, people would get like stopped out or lose like, hope or whatever in Bitcoin. But in all reality, as long as the 821 crosses back to the upside, it would look exactly like our last 2 4-year periods in a row. So I really like the way that the Bitcoin structure is starting to build right here. We don't want to get like overly hyped right now on this. It's probably going to zero like before the end of the stream. But just in case it's not, it's worth paying attention to. So Ethereum, it's okay. It's on top of the 200 exponential and simple on the daily. So yeah, it's all right. It's basically at that same level again. Obviously, we break through this. We've got some other targets to the upside. Back up here to like the 0.5 at like 2,126. And then, maybe just like 20,000. We'll have to see how that goes, obviously. That's a little bit long term. Could take at least till the end of the year. Maybe like 5 years from now. I don't know. Maybe never. So is this really like actual legitimate buying coming in? Like, is there more money flowing into the crypto space? Or is this just like CZ Binance, like printing up some extra, stable coins to like prop up the crypto market before it's too late? Probably a little bit of both, honestly. The weekly crypto market cap, we did take out that key level here at 1 trillion. So we're finally above 1 trillion again. So that's great. Entire crypto market is back above $1 trillion. Congratulations. I think the next key area to watch out for is like 1.14. Then we start looking at some actual moves to the upside. One thing I really don't like about the way this looks is the same way we were talking about how, basically Bitcoin had moved up substantially with the price and the indicator had gone all the way from the bottom of the range to the top of the range back to the bottom of the range. But Bitcoin was now like substantially higher. We see like the opposite kind of happening on the weekly chart right here. We were all the way down the bearish control zone and now we're very close to the bullish control zone. And in that amount of time, we basically moved from 761 billion up to like 1.0 trillion. So like basically we spent a ton of energy and we haven't really gone anywhere. So we got to be careful here. Obviously, with the exception of like shady entities like printing stable coins or like other shady entities like printing currency notes, aka like central banks. I just don't think there's a possibility for the actual market cap to reach the highs again. If anything, I think it'd be more likely that we see like a concentration into like a couple key projects like Ethereum and Bitcoin, and then we see all of the trash coins fall to the side of the road. But who knows? I mean, people like trash, so. Bitcoin dominance chart on the weekly. So obviously looks like we're headed back up here to the top of the range. We were talking about the potential breakout on the dominance chart. We have momentum in our favor. We have blue slope line in our favor. We went from the bearish control zone to the bullish control zone. Seems like the most likely target would be like 48%. So what about if we remove all the stable coins and we just look at Bitcoin in relation to the actual trash, crash, crap, crypto coins? Obviously here we have this little like triangle starting to form, putting in consistent higher lows. We have momentum in our favor, and it looks like we're getting ready to break out from that 51% level. And if we do, we likely just retest this previous high right here because there's not really anything else there. I mean, there's like 3 candles on the way up, 3 candles on the way down, and then a couple candles right here. So honestly, if we get through this tough level, which seems more likely than not, if we kind of keep up what's going on here, as Bitcoin was outperforming all of the other trash cryptos, it seems really likely that Bitcoin's about to gain like 10% of the total crypto market cap, excluding stablecoins. So Matic still strong here, sold off pretty aggressively and then came back up just as aggressively. Still on track for that 84% gain to anybody that bought after it got above the 200 exponential and simple. Congratulations. It's probably like the only good crypto based on like charts for a long time. It's only now that some of these other trash cryptos are actually starting to look decent. Speaking of trash cryptos starting to look decent, the BNB setup still playing out very nicely. We did put in the peak right here. It looked pretty bad right there, as basically like the whole entire like BNB Ponzi scheme was potentially coming to an end, as they were no longer to issue their Binance stablecoins. Who knows though? I'm sure they'll find some other backdoor way around it. Maybe Sam Bankman-Fried can print them off some SPF coins or something like that. But it seems more likely than not that we're headed up here to that $400 level at some point in time. As long as we're above the 200s, honestly, Binance looks pretty good. So lots of other trash cryptos too. Some of them look good, others look terrible, and then other ones after that look like they've already gone to zero or potentially headed to zero. So just kind of gauge on the chart of like how good and how bad your crypto looks based on if it's on top of the 200 exponential and simple moving averages. All right, so gold. Gold's starting to basically agree with the dollar here, and TNX starting to come back to 200 exponential and simple. So 200 exponential at about 1800, 200 simple, and heartline of the channel at 1772. Seems like a likely target, although we have put in quite a bit of downward movement on the stochastics and the histogram, but the actual price has not come down that much. So again, we got to look at this as a bullish reset. Oftentimes we see a long leg to the upside and then a shorter leg to the downside before we push back up and take out resistance, break out to the upside, and gold goes to $1 gazillion or whatever, as they like reprice like everything in gold bars, and yeah, so, or something like that, whatever it is that the gold people say. So yeah, silver too, the same thing, but it's silver instead of gold. GSG, so commodities and energy still consolidating below the 200 exponential and simple. At some point in time, I do expect this to come up here and retest the 200 simple, but overall, going from a really long aggressive bull market into like a complete trash bear market. So if we lose that $20 mark, this thing's probably just going to go straight to zero. It may stop at like $15 on the way though. LNG is next. Obviously the proxy for liquefied natural gas, as this is just like an actual company, not like the underlying commodity. But again, very, very close to confirming into a bear market, just barely hanging on to the 200s. Mosaic is fertilizer stuff. So, we obviously heard about the food and the fertilizer shortages and how everything was coming to an end. And, obviously that hasn't exactly played out. Maybe it will over the next couple of years and everybody would just die because there's no fertilizer to like grow all the food. But I guess we'll have to see in time. Humans are pretty like intuitive. I mean, I don't know. I wouldn't really bet against like human ingenuity, like just in general. People have been like growing food and like staying alive for a long time. I mean, depending who you ask or like, what your classification of humans are. But we've got like a couple million years below our belt. So I don't know. We'll probably be able to figure out how to feed ourselves. But I mean, maybe not. Bear market though, back testing the 200s, below them all now. Seems more likely not it's headed to the downside. This was essentially like a reset all the way back to the upside. Back test, reversion to the mean of the 200 seems more likely than not we're headed to new lows. AMD is next, so obviously had a little breakout from the descending broadening wedge back above the 200s, and the majority of the move has played out. Probably another like 15% to go up to that target of $99. So Visa consolidating above those levels. Maybe we get a pullback here as this starts to roll back over. But again, just on target to just go to new all-time highs. All right, I guess we'll look at some trash cannabis stocks. I just assumed these things would be at zero by now. I did light some money on fire, obviously, as I told you guys. This trade setup right here. I do assume this will go to zero any day now. I've literally already written that money off as gone forever. So at least one of my children will never get to go to college because of Aurora Cannabis. But you know what? Lots of people's lives are ruined by cannabis. So why not my child's too? So that is obviously a fake story. I'm just kidding. That being said, ACB still looks like trash. Maybe there's some potential for this back test of 200 exponential and simple. I don't know what kind of catalyst has to come in for somebody to want to buy pot stocks. I imagine people have gotten so beaten down by these things and lost so much money that they can't even open up their trading, platform to buy more of it, even if they wanted to, because it just brings tears to their eyes. So that being said, if this trade setup does play out, it's like 52% upside, and maybe it just goes to new all-time highs after that. And you guys will probably just never hear from me again because I'll just buy like multiple islands and stuff. So that being said, Tilray looking equally trashy right here. Not so much as a company, but as a stock. Again, I do just assume this thing will go to zero. It's almost there, just a little bit more to go. I'm not sure if we're going to get all the way there, but essentially we have this like descending channel thing right here. It's acting as resistance, and we're back at it again. If Tilray decides to break out to the upside, obviously we had to push up right here and it got rejected. We're just looking at basically the bottom of the channel to the top of the channel. So let's say hypothetically, for the first time ever since Tilray basically trended towards zero, it does break out to the upside. We could be looking at a pretty massive move here. So, basically the breakout measure move would be like 111%. If we just got back to the 200 exponential moving average, that would give us about 33%. And let's just say like hypothetically that this did end up being like a macro double bottom, as obviously like that was our bottom from like way back over here as well. Let's just say hypothetically it ends up being the macro double bottom. Again, I don't think that's going to happen. It's probably going to go straight to zero. It'll immediately go out of business. And, they'll probably have to do like some kind of bankruptcy thing, at which point in time, then the stock will surge. But assuming it doesn't declare bankruptcy and somehow manages to surge, just a back test of 236 takes us to like $5.52, which is pretty nice move right here. But again, probably going to go to zero. So I think we're pretty much done here. So Lulu, we got a long-term talk on this one. We talked about Home Depot as well, the Home Depot setup and everything, and their earnings coming up here soon. We did a little one as well today. Let's talk about Airbnb. This is one we haven't talked about on the channel a long time ago, but in hindsight, obviously we're fucking geniuses. So let's look back here at what was going on when we were drawing on this thing a long time ago in a galaxy far, far away. So essentially what we did was we just took the macro low and the macro high right here, and then we just drew a Fibonacci from the low to the high, and then we got our Fibonacci extension targets to the downside, which obviously these things work like fucking butter. So if you're not using Fibonacci extensions, I don't even know what you're doing here. So that being said, the 1.236 was the initial target. Once we broke down below these lows right here, we basically saw that capitulation and hit the 1.236. Keep in mind that the reason this is way over here on the left is because we drew it so long ago, and this thing has just been getting absolutely, hammered since then. We eventually did end up coming down all the way to our macro target, which was between the 1.5 and 1.618. So you actually had one chance right here and then a second chance right there. We came down almost exactly to it, and then that actually marked the bottom. Since then, we bounced back to the upside all the way. Obviously, this was not in here. I just put this in here. So we bounced all the way back up to the 236, and then we shot straight to the 382. And then recently we just saw the earnings report come through. This was basically a back test of the 200 exponential and simple, and then a move up here. And then the gap up basically took us exactly to the 0.5 in after hours trading. And then it actually came down a little bit and then moved up again. So now there's a big gap left right here. We got back to the 50% retracement. That means from this high all the way to the low, we've now moved back up 50%. And you can see that if we were looking at this as basically like, just two things. And we basically said like, hey, if we were going to draw like the middle part of this chart, you would say essentially like this is the top half of the chart. And then you would say this is the bottom half of the chart. And, the colors don't matter right here. I'm just trying to make a point that probably doesn't even make sense, nor do you care. But, basically this is the top half of the price action. This is the bottom half of the price action. And this is like the median line, the neutral line or something like that. So here, you know, we were obviously more bullish. Here it looked absolutely terrible. And now here we're basically back at that neutral area. So in relation to the actual 200s, we're like technically above fair value. But based on how many times this acted as support, I would expect this to act as very, very strong resistance as well. And that's what that red line means. Again, that was an old school red line that we had in here forever. If you don't believe me, you can just go watch all my videos for the last like year until you find one where we looked at Airbnb, and then you'd be like, holy shit, that's crazy. All right. So yeah, that's it. That's all we're doing today. Jump over in the chat here. And then I've got some other stuff planned here for some static videos this week. All right. So what do we got? Not sure where I left off. 10K Bitcoin is coming. I like that you added the sweat now. It's not looking as likely now, is it? Crypto Galt says, hey, buddy, glad to make the live stream. Hey, I'm glad you're here as well, man. Always glad to have you guys. If you are in the chat right now and you haven't said what's up, might as well do it now. And if you're one of those people that watches the stream but never subscribes, now's your last chance before I hit 1,000. Or maybe not. Maybe probably never happen. I think more people unsubscribe every day than actually subscribe. So more likely actually headed back to 0. Cool Sheet says, what's up, bro? Biddy giving the bear undead Uranus shuttle missing. Oh, my bad. Wait. Biddy giving bear the unlubed Uranus shuttle mission. Yeah, I mean, you got to be able to like flip back and forth, man. When the charts start looking bullish again, you don't want to be the last bear ready to die on that hill. Hexevolve says, who is hodling or waiting for lower prices? Hodling or waiting for lower prices? I don't know. I'm not ready to commit one way or the other for like an actual like quote unquote investment. Parentheses, air quotes. Prague says, any thoughts on NEO after Tesla pump the Chinese EV turn? Nah, NEO's chart actually looks like complete trash. If you look at it like compared to like any of the other like big Chinese names, it looks absolutely horrendous. They've all like bounced like really nice back up to the 200s, and NEO just looks like, I mean, it looks terrible, dude. I was looking at the other day, like, I mean, I'm sure a lot of people are like thinking the same thing. But I mean, it's just like massively underperforming, which is never a good sign. And it's essentially like just hanging out like at the lows. Now, obviously, we did have some potential setups for NEO. I mean, this thing has like literally played out like clockwork. You know, my predicted, anticipated bottom was essentially the 618 and this blue box right here. And, you know, we literally got to the bottom of the blue box like within a penny. We were like, what, 843? 805 was like the 0.618 retracement. I mean, but I'm not convinced that we don't come back down here and actually like tag it. But this is what I'm talking about. You know, essentially this is what NEO has done like recently. Like in the meantime, other Chinese stocks went like this. So like if you look at this compared to like Baidu or Alibaba or something like that, they're like way up here, like well above their 200s, up like hundreds of percent. NEO is just like clawing around like in the bottom, like looking for like, you know, leftover food, stuff that hasn't been completely eaten. And honestly, like, I mean, everybody's like comparing all the other EV makers or automakers and stuff. Like most of them look like trash. Tesla looks good, but like Tesla, everybody hated like a few weeks ago too. So, I mean, I don't think like now anything has really changed. The only thing that has changed is the stock price doubled, and Tesla's not even above the 200s. So I'm not really convinced by like this whole big turnaround. I don't want to be like overly like, you know, bearish or, you know, bullish or anything like that. But I mean, let's be real. This is trash. Now, does it mean that there's not going to be like some potential? No, I don't want to give you that impression, because honestly, I was looking at this myself and looking for a potential trade setup, because the way I'm looking at this right now is, you know, essentially we're at the bottom of the range. So like, I mean, there's only really like one of two things that could be left to happen. We're in this little like ascending channel, and, you know, we're either going to find support right here and move back to the top of the channel and retest the 200 exponential and simple. That seems like the most likely case to me, just because it's the easy move and we trade inside a range and like the market gets their nut. Like the algos get fulfilled, everybody's happy, the whole world goes on. I can't speak to the actual company or its fundamentals or if it's good. Actually, no, I can. You know, it's a trash company, it has trash fundamentals and it's garbage. But you know, I'm just going off like these two red E's right here. So I don't know, is that one going to be red or is it going to be green? Does anybody even care? Do valuations matter? Probably not. That being said, there's definitely some potential here, because if we're going to break down from here, we're only a couple percent off the lows. So it's like not really that big a deal. I mean, it's like 12% or something like that. And we're putting in new lows. I mean, depending if you're going by like the actual daily close or the wick right here. If you're going by the wick, technically it's like 20%. But if you're going by daily close, which is what I use because that's what the indicator oscillators use, you're looking at like 12%. So we're 12.6% off the lows right now. And the upside potential right here is 44%. So like, man, maybe I was like, there's definitely a potential for a trade setup here, but I'm not sure if that's potential trade setup definitely is there. But like, I wouldn't look at this as like, oh, I'm going to buy this and hodl it because it's going to be back at like new all-time highs anytime soon. So this is essentially what I would be looking at. You know, if we close a new low, I want to be like out of this position. It's like 12, 13%, something like that. If we move back up here to 200s, that would be my take profit, which also corresponds with the top of the channel, also corresponds with a breakdown from the channel. So, you know, essentially, I mean, it's not like we haven't done this 46,000 times, but you know, that's obviously our main support. If we break down, if we close lower than that, we don't want to be in the trade. And then this is obviously our main resistance, which also corresponds with the top of the channel. So for a trade setup on NEO, and maybe I was biased when you asked me that because I looked at it recently and saw a decent trade setup, but not like a good opportunity to like invest. And when I say that, it's because I'm considering a lot more potential like long positions, investments, whatever. But you know, obviously this is well below the 200s. So it could be a good opportunity for the backtest reversion to the mean of the 200s. But if I was looking to buy into something, I want to be buying into the actual trend when it's above the 200s. So as far as China is concerned, I still consider it a very risky market right now. I think a lot of it has moved a lot on like the, you know, reopening anticipation. I don't know if that's actually going to manifest. I don't know if it's actually going to manifest the way people think it is. But NEO long term still looks like complete trash. You definitely don't want to be like investing in this or like, you know, putting your life savings in or anything. But as far as like the short-term trade setup and then the potential, it's there. This is what we talked about a while back on that push down here, which was basically on, I'm on the weekly now. When we broke down to the new low right here, we put in bullish divergence, same way we did on Bitcoin and some of the other stuff we were talking about today. And then we've seen green histograms since then. But the problem is price action isn't moving. So I want to see all this happen, the bullish divergence, the new low, the higher low, the momentum starting to build to the upside. But I want to see it happen also breaking through like some of the key resistances. So this here for me was a big like line in the sand. The fact that we couldn't put in a higher high right here and we couldn't get back on top of the 21 tells me like, hey, wait a minute, this might not work out as good as we want it to. So likely or potentially, you know, what I'm setting up for, anticipating, you know, looking out for, whatever you want to call it, is basically that we're going to get one more drive of bullish divergence, because this is actually a nice setup. Like when we have this bullish divergence on a long time frame, we're back above the slope line, it's blue. That's actually a pretty nice setup. But what it looks like is going to happen to me, because other people are going to see the same setup. Other people trade the same way we do. They use the same trash that we do. They're, you know, same thing, but they're not interested in it. Big money's not moving it. Whales aren't moving it. So why is that? Is it some kind of like fundamental thing, or are we going to have to put in, you know, one more kind of capitulation downward thrust? And that's what I think is going to happen. We have our low right here. Then we have a higher low right here. I think what's going to happen is we're going to get one more thrust to retest the slope line. And then when that holds, we'll have a low, then a higher low, then a higher low again. And then that will give us the fuel to break out and potentially come back to like that $18 level, which is, you know, basically like that 100% move. So that's what I'm looking at, like long-term, weekly. That's what I'm looking at on the daily. Yeah, so I mean, that's pretty much it. So, you know, is there a potential scalp in here short term? Yes, I actually like this trade. It's pretty decent. And, you know, this is where I want to be buying support, basically selling resistance. One thing I don't like about it, though, is it has been underperforming the market, and it looks like it's potentially setting up for that weekly push down again, potentially to new lows for another drive of bearish divergence. After that, though, maybe goes substantially higher. So that is NEO. So yeah, I mean, actually, like the short setup's pretty good, but like investment wise, it still looks like trash. But I mean, maybe that's all you were curious about. For full disclosure, I'm long, says Hex Evolved. Big Papa Paint says 2 more people and you're at 1,000. Yeah, I've been like counting down. I think at one point in time I actually made it to 999 and then I was like back at 997. So I imagine there's somebody out there just waiting to be that 1,000th person, as if I'll know it's them and they'll get like a little prize like sent directly to their doorstep from me. You know what? Matter of fact, if you are the 1,000th subscriber, let me know your wallet address and I'll send you a Dogecoin. Just one single Doge. It's a heavy resistance at 1,000. I think you're right, man. Every time we come up to it, there's just too much selling pressure. People immediately unsubscribe and then we just go lower. As long as we don't put in a lower low. I started at 0, so if we go below that, I'm going to be pretty upset. But no, I mean, honestly, I don't really care. I mean, it's not like I'm doing this for the money or anything like that. So, all right, I guess we're going to wrap it up there. So appreciate everybody tuning in today. Oh, right at the 1 hour mark. It's like clockwork. That's absolutely fucking amazing. So yeah, a lot of cool trade setups playing out, and you know, make sure you're locking in those gains or just do whatever the hell you want. I don't really care. You know, obviously you guys can watch the channel and see if it looks like I'm right or wrong more often than I'm not. So I don't think we talked about the Bitcoin futures chart, but it's like pretty much the same thing. As long as Bitcoin futures is closing up above like 23,690, we're in pretty good shape. So all right, appreciate everybody tuning in today. Hope you guys enjoyed the stream. Always a pleasure. If you're not in the group and you want to be in the group, we do group stuff there. So wait, no, that came off really bad. That's not what I meant. But yeah, it's for trading and stuff. Yeah, I think that's it. We'll wrap it up right there. So remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. If you listen to anything I say in the stream for anything other than entertainment purposes only, you'll lose all your money. Your family will tell you that you're ugly and incompetent. Your dog will run away and find a new owner. And then also you'll end up living in a van down by the river. So as long as you're okay with all that stuff, by all means, feel free. But you know, if you don't want those bad things to happen to you, I definitely would not take any of the trade setups presented in this video, or I mean, honestly, buy like any of these assets because they're all trash. Everything's going to zero tomorrow. Okay, so no stream on Friday. I'll see you guys on Sunday. So check it out Sunday evening, 8 p.m. Eastern Standard Time for a live stream. All right, peace. See you guys later. Thanks for tuning in. Everybody have a good night. Crypto Trend Trader, I'm out.